predicted when we was on live at around 12. So you did expect earnings to beat. So what you think?
Well, again, I kind of anticipated them doing it because of everything that happened, in this quarter.
Mm-hmm.
But what I would like to do is give the people some history on AMC. If we can give them a little bit of history, starting with the company. Because of the pandemic and everything shutting down, the company was on the brink of bankruptcy. So what happened was some of the hedge funds and market makers came against AMC through shorting, with the anticipation. They bet that the company would go under, basically close its door. So they put so much pressure through shorting the stock to send the company bankrupt.
Yeah. Keep going.
So the Reddit Wall Street Bets community, they rallied behind the company and put some of the news out there to the public, the retail investors, and so we formed what you would call the apes community,
Right.
to go against the market makers / hedge funds.
The hedgies.
The hedgies, apes against the hedgies. So it's been a tug of war from last year, 2020, maybe even a little before then. Was it 2019 when it first?
What was the catalyst?
No, when they first. AMC had a lot of debt.
Yeah, but this is what I was about. I feel like you're missing one thing.
Share.
The pandemic did shut down theaters.
Mm-hmm.
But AMC was already on rocks because of the rise of streaming services.
Uh-huh.
So AMC probably was being shorted for years.
Mm-hmm.
It just so happened when the pandemic came, I feel like the shorts really doubled down on certain stocks, the GMEs, the AMCs. And even if you want to look at GME, the rise of e-commerce was why GME was on the rocks. So think about the streaming services, and e-commerce was the biggest threat to the theaters and big retail companies. That's
so
why.
Basically the innovation of digitalization.
Right.
Okay.
So from the hedge funds' perspectives, they seen a great opportunity
Uh-huh.
to short these stocks. So the retail traders just seized the opportunity back.
And what was that opportunity?
We realized that the shorts were so
Over
leveraged, and they were shorting this stock into oblivion. Basically, we basically piled in to specific stocks and countered. We basically made them have to make a decision. Almost, it's either you cover or you keep losing money because we piled into these stocks so heavily.
Uh-huh.
And that's where this tug of war is continuing.
And this tug of war started, as I mentioned, I believe towards the end of 2019. Definitely all throughout this pandemic, it's been going on. So you had some highs like back in January. AMC started, and along with GameStop, but for this particular live stream, we're dealing specifically with AMC.
Right.
So AMC went up. It started driving up. The market was trending upwards, and the market makers and some of the exchanges pulled a halt. They pulled the plug,
Right.
causing the retail investors to not continue to gain profit and putting leverage back into the hands of the market makers like Citadel and Melvin Capital and some of the other big hedge funds, giving them leverage back.
Right.
So as a result, the stock started trending down. It began to trend down for months. This was like in late February, early March, I believe, when this started taking place.
More so early February. Yeah.
Early February, okay.
Early February.
So early February, this began to take place, and so for about a few months, so it triggered some lawsuits. Congress got involved. This was big news around the country, and even domestically, but even other countries began to rally behind the Ape Nation / Wall Street Bets community,
right,
and began to rally behind this particular stock, AMC stock, and we cornered them, or we took up about 80+% of the shares of all shares that was in existence.
Right.
So as it was trending down from the stunt, I'm gonna say stunt that the market makers pulled.
Right.
Us, the apes, we were patient.
Right.
It took us about 3 months. We were in no man's land.
After the stunt.
Okay.
Right.
We were in no man's land, and but we kept the faith. We kept the fight.
Right.
And in the beginning of June, around the 2nd, I believe.
Yeah, late May, early June.
Okay. Mm-hmm. The market began to trend upwards. AMC went to all-time high to about 72 or 70. Yeah, 72 or $77, somewhere in between there. Yeah. And a lot of people, ourselves included, made a huge profit. Mm-hmm. Our investments yielded a great deal.
Antonio, is this logged in? You can keep going.
So it began again on that same day that AMC was trending upwards. The market makers put a halt to that particular stock. Mm-hmm. They froze. As a result, it began to be again trending downwards again. The SEC is looking into it. They've been those hedge funds are being investigated. Laws are currently being amended to hopefully solve this problem of market manipulation. And here we stand today with the good reported earnings call, as Dayton alluded to. And I think Dayton want to share a little bit more with us about some of his perspective and some of the things that he sees.
Well, I was about to go ask you a question about, because you brought up the laws that's passing. You brought up and Antonio, see if we can get some specific laws that's actually passing. You brought up the laws that's passing and the investigations that's happening. Mm-hmm. Where do you think that goes?
Well, I think they don't have a choice. I'm saying the lawmakers. You know,
Mm-hmm.
the ball is in their court. The SEC was formed to, quote unquote, protect the retail investors. So we would, for incidents like this, mm-hmm. ironically, you know, so we wouldn't be, couldn't be, to bring a stop to the manipulation that happened, that has been happening in the market for years. And so I think it's enough noise that has been surrounding these stocks, AMC, GME, and things like that it's been brought to mainstream, to mainstream media, to social media, that they have no choice but to act ultimately in favor of the to create a fair playing field, so to speak.
Right. So one I'm glad that we're talking about this. I'm heavily into AMC, mm-hmm. full disclaimer. So remember I said earlier, right, on the previous live stream, I said AMC, the earnings really won't have a big impact on it unless there's a momentum push. Right? I feel as though with AMC being at, give me 1 second, AMC being at 36.96 right now.
Woo! And the after hours, how much is that?
Up $3
in the after hours.
This
what percentage?
Right now, over $37. So this is happening live as we speak. Crazy. Do you think this is?
Let's go apes.
Right, let's go apes. Do you think this is happening? Do you think this is the momentum that I was alluding to in the previous live stream that we needed to see another $70, $60 push, or do you think this is just temporarily?
Well, I don't think that this is. That's a great question, by the way. I don't think that this gives us that same $70 push.
Mm-hmm.
However, you can see throughout the day we're up on overall day about $5.
Right.
Somewhere around there.
Mm-hmm.
So we're a long way from 70.
Right.
But again, like what we talked about earlier, I think that other things come into play with these forced share recalls, some of the amended laws that's coming into place, the debt ceiling being close to $1 trillion,
right.
Margin calls, etc.
Right.
I think those things are catalysts that can push us even over the $70 mark. Again, not financial advice, full disclaimer. It's just my belief and my perspective based on some of the research that I've done. But to answer your question, I think that, $5 is, a great profit on a day, on one day.
Mm-hmm.
But I think that it can go and will go much higher, but I think that it'll be other catalysts that cause it to reach those marks.
Yeah, got you. Let me tune into this to make sure that it's not early.
And we're just waiting for the live call, the replay of the live.
Just an update. We'll be reacting, listening to the earnings call that's supposed to be happening at 5 o'clock. Yeah, this is just a lobby, so we can mute this right now. So, AMC is having a good after hours. Let's see. Do we got anything else that's having a good after hours? We got a lot of screens on here.
So would you buy more now, or in light of the uptrend?
I wouldn't necessarily buy more now. I feel as though, I'm already in it.
Why and why not?
For one, I think you should buy stocks in the red. I don't really think
when you say in the red,
on a bad day, on a dip, I think you should buy a dip, not a rip. And I feel like this is
that's
rip.
a good way to put it.
Yeah, this is a rip. So it's kind of like buying that, even though it's not an all-time high, obviously, you're buying at a high. With that being said, though, it depends.
Because it can go higher. Right, it can go higher.
So if I think AMC will go to $50, $100, $150, and then on up, why not get in at 30?
This is a great price to get in.
Right.
Yeah.
Why not get in at 35, 36, 37?
So are you that bullish on it? That you believe that it'll go that high? Or
as far as
personally,
you talking about that specific price target? That's what you're talking about.
The prices that you just named.
I'm bullish on it.
Personally,
I'm bullish on it. I'm super bullish on it.
Okay.
I don't really have a price target for it no more, though.
Got you.
I don't really have a price target. I feel like it can go up to 100. Excuse me. I feel like I can. I feel like it can go up to the hundreds, possibly even all the way up to four digits.
Yeah, that's what a lot of speculation in the market is, that it'll reach.
But it's pure
hundreds.
speculation, though.
I agree.
So, like I said, I've been in AMC pretty much from the start, from the jump. I got in around $5.
You've been fortunate.
Right. I lost money.
Well, you didn't. Oh, early on. Before you encouraged me to get into it.
And then, we're a new channel, so I'll continue to document what really transpired in these last 6 months. But as of right now, I'm trying to stay on topic.
Right now, you're winning.
Right.
With AMC.
Right.
Okay.
So I am super bullish on it. I don't really have a price target no more. Mm-hmm. It can go up to 50. It can go up to 500. It can possibly go up to 5,000 based off speculation, based off news reports, margin calls, how much it really is being shorted. Who knows? All I can say is that I'm hoping for a big run. And I do believe a big run will happen.
Okay.
Wherever that run goes to, I don't know. But I am super bullish on it, to answer your question.
Okay. Yeah, Dayton got me into AMC, I think sometime in when it was lagging. So I caught, I was able to catch, like yourself, I was able to catch that run up, and made some pretty decent money off of it, along with the rest of my portfolio, but specifically AMC. Dayton was able to walk away from his job and become a full-time investor. We were both able to get this business off the ground. Last year, or 2 years ago, including last year, we were looking for capital to fund our business. And like Dayton said before, we got so many no's. Now we're in position because of stocks like AMC and some of the other things that we're invested in. But AMC to fund our own company, and we're able to make a decision whether we want to take investments or not. So it's a beautiful position to be in. We're fortunate, we're thankful. And we're doing what we love to do, which is empower others, educate, and live free.
Right.
And make our own decisions, make our own way.
Nah, I'm with you. I'm pretty much like what AMC has done, and this is pretty much an AMC live stream. What AMC has done for not just me, but so many people, and what so many people is really kind of banking on AMC to do for them. If you got the true conviction and the true staying power to really go through this journey, it's changed people's lives, and I feel like it is changing people's lives. Even if you don't get a financial life changer, I feel like it's changed a lot of people's mindset.
Yeah, the movement alone.
Like the movement.
Yeah, the community, as I mentioned earlier, the community rallied behind. So many times, most retail investors or your average citizen is, put in a position where it's like a lose-lose position. Right. Where the market makers or you hear the term, the rich get richer, things like that. And the market or the market makers or those who are already wealthy, they play the market. And so they play the market to our disadvantage. They play off of our disadvantage. So for one of the first times in history, we were able to come together as a people and fight against that beast.
Right.
And the fight is still going. It's been a journey, as Dayton said, but a very interesting one that I wouldn't change, one that I'm championing, and I'm looking forward to where this goes, where it ultimately takes us. We're comfortable now, but the story's not over yet.
Right, and that's really the main message you can really run with this movement, is that it's not over, because it's a lot of times people got their hopes up high. Like I said, I got in it from January, and you was really projected to pretty much kind of swing trade it. I went in it to swing trade it. Mm-hmm. And now I'm like a permanent shareholder.
Right.
In AMC.
Not like you are.
Right, I am. So just think about that. So
right.
It's an evolving journey. It's an evolving movement, and an evolving stock and company to me. And I think it's just beginning, and then at the same time, it could just be ending at any time. You don't really know.
Right.
So I think it's good to have that perspective though, that that it is a journey.
Yeah.
And whether you like AMC, don't like AMC, the movement or whatever it is, it's impacted so many people because of that movement.
Yeah. And like you said, like Dayton, like you just said, you're now a long-term holder, so to speak, meaning that you have full shares.
Right.
My strategy has been and is different. I'm a trader. I'm trading AMC.
Right.
I made good money off of it, but I'm not in it long term. That doesn't mean that I won't convert to being a long-term investor. My strategy is just different because I'm looking at other opportunities that's in both the traditional markets as well as the crypto market, just like yourself.
Right.
So my portfolio is just is divided differently. So trading was the best strategy for me when I first got in.
Right. Antonio, give me some of your thoughts on the movement. I know you've been affected and learned a lot, and even did some things with AMC and encouraged others to follow the movement, and see what's actually going on in the market, whether you like it or don't like it. So give me your insight on what's going on right now with the earnings call.
I think it's like it can start something that we all been waiting for. Like we all been waiting for a pivotal moment in AMC to, substantially increase the price, because that's what we need, a substantial increasement of the price action.
Right.
So,
momentum.
Yeah, the momentum. So hopefully with the good reporting that this kind of boosts, other probably big institutions to get in as well.
Right.
Well, it is. Some of the bigger institutions are fighting with us. Apes,
Right.
BlackRock owns. I forgot how many millions of shares.
Aren't they the biggest?
Yeah, they're the biggest.
Institutional holder.
BlackRock. Yeah.
Yeah.
Yeah. Of AMC.
Right.
Yeah.
Right, yeah. Mm-hmm.
So it is currently, but to your point, even we're hoping for even more. As you were saying, Antonio. I'm sorry for cutting you off.
Yeah, so hopefully that this can kick off something, starting tomorrow in the regular market hours.
Right.
And we don't see no, manipulation going on.
As it has been.
Yeah, as it has been. So I can't get my hopes high because that's still a factor in the equation. But this can be a good kickstarter to where we need to go.
Can you explain on the manipulation that's happening with AMC?
Yeah, some of what you know.
Right.
Some of what you based off the research that you've done and some of the articles.
Yeah, some things I have read up on. You have the dark pool scenario and situation.
That's a good.
The naked shorting, the synthetic shares, the parking hour, the payment of order flow, parking hour buy orders, and sending our sell orders to the live market. So it's plenty of ways that we're being manipulated
and held down.
And a lot of people are losing money, especially the people that have options. That it's a timely manner.
Right.
So, like I said, hopefully this can kick off a good movement that we all been waiting for.
Right.
Yeah.
Right.
That's good insight.
Yeah, thank you for your insight. I ain't gonna lie, like it's the stock market. You know how in sports, right? You got certain shows. I mean, certain teams that's good. Let's say the Spurs, good. But when the Lakers going, it's just different. That's what AMC is for the market. It's kind of like when AMC going, everybody juices get up, flowing a little bit more. It's just kind of like it's a whole different energy when AMC is going. And honestly,
you know why I don't mean to cut you off.
Yeah,
people like winners, and they like winning.
Mm-hmm.
So, I think you give a good parallel when you mention the Lakers. They've been a winning franchise, actually helping to propel the NBA's brand because that franchise has won so much over the lifespan of the NBA.
Right.
So, like you say, you look at AMC, how the market gets up and rally behind, because they're AMC, like we mentioned earlier about the story of AMC, the backdrop, they were on the verge of bankrupt.
Right.
Because of the debt and because of innovation and the evolution, how things is changing from, into a digital world. We're moving rapidly into a digital world.
Right.
But go ahead, Dayton. I'm sorry.
No, that's all I was really saying. It's just a different energy when AMC gets going. It's just a different. It's like the Warriors when Steph Curry and Klay start dropping the threes.
Right.
That's what AMC is. That's what GME is. You can say as well. Even you could bring in something like a Tesla. You could say it's certain stocks that just got a different feel, a different hype around them, and this earnings call is starting to give me that feel. Like I'm starting to get my juices going again, and we haven't had really some good momentum like this for a while.
Right, and
with actually some actual fundamentals backing it.
Right, we got about 2 minutes till the live call. Go ahead, continue.
No, that is the reason why I'm excited to hear this earnings call and why I'm proud to be an AMC shareholder.
Yeah, and I would encourage everybody to follow the Wall Street Bets and Reddit and just do your own research on what has transpired, what's currently happening with AMC and the market manipulation, and make it come alongside us and continue to make the noise.
And I'm glad you're making that point because what AMC really is, it's almost a rebellion to broken markets.
Right. To oppression, suppression,
right.
To the bully.
Right.
You can think of David and Goliath, the David and Goliath story. That's what I think of when I think of AMC.
Right. And it just doesn't affect the shareholders, the traders, the retail investors, the institutional investors, whoever that is invested specifically in AMC. AMC affects the whole market.
Right.
Because what AMC's fight is fair markets.
Right.
Fair markets.
Right. That's all anybody really can ask for is just, give us a level playing field.
Right.
Where the odds are not so heavily swung in one entity's or one institution favor, such as the market makers and the hedge funds.
Right. So I'm gonna turn up the volume on the conference call. Still lobby music. So I'll keep my eye on this. Yeah, still lobby music. I'll keep my eyes on this. I'll turn this down a little bit. Let's go into while we're waiting for that, let's go into see what Tesla's doing in the.
Give us the price action on AMC. What the price action is for AMC. Currently up 7%. Let me go to it. Up $1.26 in the aftermarket,
post market. So it's taking a little dip.
Okay.
It's taking a little dip, but we still high. It's still $35 as of right now. Where was I going at? Tesla is down $1.20 in post market. And let me go to GME real quick.
And these other two stocks, GME and both Tesla, have been and are being shorted the same, just like AMC. So I'm glad you are going to these just to give the viewers some insight on what's happening with, because they kind of run in the same direction because they're so heavily shorted.
Especially GME and AMC, not necessarily Tesla, but Tesla's been heavily shorted as well. GME up 82 cents in the post market. Up 82 cents in the post market and up over $10 on the day. So they had a real good day today. Let me check back in with this earnings call.
Okay, we're live.
Yeah.
The earnings call is live. Put the mic.
Not place undue reliance on these statements. The company undertakes no obligation to revise or update any forward-looking statements, whether as a result of new information or future events. On this webcast, we may reference measures such as adjusted EBITDA and free cash flow, constant currency, among others, which are non-GAAP financial measures. For a full reconciliation of our non-GAAP measures to GAAP results, please see our earnings release posted in the Investor Relations section of our website earlier today. After our prepared remarks, there will be a question and answer session. This afternoon's webcast is being recorded, and a replay will be available in the Investor Relations section of our website at amctheaters.com later today. With that, I'll turn the call over to Ab.
Thank you, John. Good afternoon, everyone, and thank you for joining us today.
Hey, Adam.
The second quarter of 2021 was another very important quarter for AMC. We have a lot to talk about on this call as the considerable progress towards recovery that AMC is making, and we have some real news to break today as well that will be new information to all of you. Before we go there in detail, I first would like to express a very warm welcome to what from past experience makes us believe that more than 10,000 individual AMC investors will be listening live to this webcast. And another warm welcome to the at least hundreds of thousands, if not millions of our investors who will be listening to replays, reading our press releases and AMC Investor Connect communications, or following on Twitter and other social media platforms our earnings report and the accompanying new news that we'll be discussing later in the call. Realizing that it is these investors who now actually own control of AMC Entertainment Holdings, for the first time ever, later in this call, we will answer a potpourri of questions that have been submitted to us directly by our shareholders. As to our second quarter performance, I think you can see from the release that was issued after the market closed today, we're making tremendous progress as our business emerges from the impact of COVID-19.
Yes, sir.
This progress can be seen not only in our operating statistics and financial performance, but also by the significant strengthening of our balance sheet. AMC is stronger today than it has been at any point since the pandemic forced the closure of all our theaters in March of 2020. Our quarter-ending liquidity at the end of Q2 on June 30 is actually once again at a 100-year high. Now that's precisely what we said on the Q1 call when we reported to you that at March 31 we had $1 billion of quarter-ending liquidity, and that was the highest quarter-ending liquidity that AMC had ever had. Well, in Q2, mostly May and June, we raised another $1.25 billion of fresh equity capital.
Wow.
$1.5 billion raised
in recently past quarters. So, we ended Q2 with some $2 billion of liquidity. That's cash in the bank and undrawn revolver. And just a short 3 months later from our last call, that $2 billion figure is literally double the Q1 mark.
Wow.
A new record, doubling the old record that was set just 91 days prior. As for our earnings in Q2, thanks to rising attendance, increased ticket prices, achieved both through mix changes and actual price increases,
$2 billion doubled into turned into $4 billion.
A relentless focus on cost containment,
liquidity,
and the pruning of marginal theaters from our network, our financial results in Q2 were well ahead of our own and consensus third-party expectations. In short, AMC crushed it.
Yes, sir.
You've already seen some of the highlight headline numbers. Revenues in Q2 of $445 million. Consolidated food and beverage revenues per patron up 44.1% over that same statistic of the second quarter of 2019, the comparable quarter pre-pandemic. A net loss of $334 million. An EBITDA loss of only $151 million. An EPS loss of only 71 cents per share. Gross CapEx expenditures in Q2 2021 of only $17.9 million. These are very strong metrics across the board performance by AMC compared to what many people, ourselves included, thought might happen in Q2 of 2021. And here are more operating statistics that also suggest things are improving at AMC as 2021 unfolds. Overall ticket admissions revenue in the United States in 2021 versus 2019 pre-pandemic. So this is overall ticket admissions revenue in the U.S. Well, it was 13% of what it was 2 years ago in this year's Q1. But it was 29% of what it was 2 years ago in Q2 of 19.
So that's more than
And
double.
Right.
so far, in the first
In
weeks
one
of
quarter.
Q3, we're running 45% of our 2 years ago levels.
Dang.
So Q1, it was 13% of what it was. Q2, 29% of what it
Is this
And then
was.
just the first week.
Q3 so far, 45% of it was. It's still down, but the trend line shows
Is this
significant
revenue?
improvement.
Um,
And even that's somewhat misleading because we've reduced so many showtimes at our theaters to save on theater operating
ticket
expenses,
sales.
which partially mitigate those revenue declines. So if instead, rather than just looking at ticket admission revenues, if one looks instead at
same
capacity
ticket sales
utilization,
admission.
that's the percentage of seats that we sold as a total of what was available for sale, you'd see that our capacity utilization was 41% in Q1 of 2021 of what it was 2 years ago in Q1. It was 61% of 2 years ago levels in Q2 and 68% of 2 years ago levels so far in Q3. Again, capacity utilization, 41% in Q1, 61% in Q2, 68% so far in Q3. Again, that trend line is pointing up. We certainly have a way to go, but progress is clear. And we should be getting to play a lot more big movie titles in the balance of Q3 and Q4 2021 as contrasted with what was shown in our theaters in the first 6 months of this year. Incidentally, we see the same exact positive trends at our European theaters. Let's start with 2021 admission revenues. In Q1 of 2021, there was a pretty bleak 2% of 2019 levels. 2%. In Q2, it was 18% of 2019 levels. But so far in Q3, we're now running at 57% of 2019.
Let's go Apes.
Yeah, that's crazy.
1857.
That's crazy.
Clearly an upwards trend. The same holds true for that same capacity utilization statistic in Europe for us. In Q1, our capacity utilization in 2021 was 53% of the 2019 level. In Q2, it was 56% of the 2019 level. But so far in Q3, it's 69% of the 2019 level. 53, 56, 69. Again, up arrows with ways still to go for sure, but up arrows nonetheless. Despite the financial and operating results would suggest we're on a path to recovery, I want to assure you there are no victory laps being taken. We are still losing money. We are still burning cash. We're burning lots of it, but we're using cash, not generating cash. So we're not out of the woods yet. We do still live in a COVID-infected world. But fortunately, we can see a light at the end of this tunnel. Vaccination rates have climbed quickly in 2021. And the counterintuitive result of this new Delta variant is that vaccinations likely will continue to rise. And vaccination increasing is very important for AMC and for the movie theater industry generally. No one has a perfect crystal ball, of course, but based on what we know and what we see today, we currently estimate that AMC's theater-level cash flows will turn positive in Q4 of this year, assuming that we all see at least a $5.2 billion domestic box office cumulatively for the year. Now, there are some naysayers who are quick to point out the size of our debt load. What they do not bother to mention, perhaps because it does not fit their narrative, is that we have smartly laddered that debt. We have no debt maturities at all until 2023. And most of our maturities do not come before 2026. This gives us considerable time to deleverage our company, to further strengthen our balance sheet, and to refinance our liabilities. And hopefully in better times.
Business 101.
I'm reminded in all of this that there were those who were absolutely certain, they just knew that AMC would file for bankruptcy in calendar year 2020 or early in 2021. At AMC, we proved them wrong. There are those who were sure that our recovery in Q2 would be slower than is the current reality. Again, the Q2 numbers for AMC have proved them wrong as well. But there are those still who continue to forecast the demise of the theatrical exhibition business overall, or maybe they just want to predict the demise of AMC. They say that streaming is going to beat us. That's their conventional wisdom. Well, a lot of people mock conventional wisdom because so often it's just plain out wrong. You've likely heard before this mantra, maybe even repeated it yourself. Radio was going to kill off movie theaters. TV was going to kill off movie theaters. VCRs was going to kill off movie theaters. DVDs were going to kill off movie theaters.
Oh, preach!
Each time, movie theaters proved resilient. Americans went to a movie theater 1 billion times in 2019. That's a billion with a B. And the global box office in 2019 was a record high $43 billion. Yes, there was a pandemic, but now streaming is going to kill off theaters we breathlessly hear. Well, at AMC, we intend with all of our might and brains and heart and sinew to prove those procrastinators and prognosticators wrong too. I'm now going to turn over the call to our Chief Financial Officer, Sean Goodman, to give you some more insight into the progress we're making, and then I'll come back to break some news before we head to Q&A. Sean?
Thanks, Adam, and thank you everyone for joining us this afternoon.
Let me give a rundown.
As Adam noted, this quarter marked an important and very successful step along our pathway to recovery. Overall, our global attendance in Q2 was more than 3 times that of Q1. While this is approximately 77% below 2019's attendance levels, it is only approximately 45% below our 2019 attendance per showing. This is an illustration of how we're actively managing our show times and associated costs to optimize the efficiency of our operations. We have a way to go before the business fully normalizes, but clearly we are on the right path and making significant progress. In general, comparison of our results to 2020 and 2019 are not particularly meaningful, given that we are still in a ramp-up phase. However, there are certain metrics that are really very encouraging and worth mentioning. Compared to the second quarter of 2019, the domestic average ticket price was up more than 15%, and food and beverage revenue per patron was up nearly 42%, to a very impressive $7.91, and this compares to $5.58 during the same quarter of 2019. Similarly, the international average ticket price was up 6%, and food and beverage revenue per patron was up nearly 33% compared to the second quarter of 2019. This food and beverage increase is primarily driven by a significantly higher percentage of guests choosing to purchase our food and beverage concessions. We are continuing to see strength in both the average ticket price and food and beverage per patron as we move through the third quarter.
AMC running at 35.54 right now.
And enjoying the full immersive theatrical experience, the sights, the sounds, and the innovative AMC concessions. Let's talk a bit about our balance sheet. As Adam noted, we ended the quarter with $2.023 billion of total liquidity. And this is comprised of $1.811 billion of unrestricted cash and $212 million available under our revolving credit facilities. This record liquidity level was made possible by our equity issuances during the quarter, plus the completion of the sale of our remaining equity interest in theaters in Lithuania. On average during the second quarter, our cash burn was $85 million per month. This is a significant improvement from Q1, when the average cash burn per month was $120 million. And this improvement in cash burn is a result of higher gross box office grosses, together with our very strong operating performance. And it's particularly noteworthy and an impressive improvement when one considers that our cash interest spend and deferred rent repayments were significantly higher in Q2 than they were in Q1. If we look at cash burn before the payback of deferred rent and debt servicing costs, it was approximately $40 million per month in Q2 versus a burn of $115 million per month in Q1, a very significant improvement. Note that our cash burn numbers are stated after normalizing for the impact of capital raised during the quarter, and therefore exclude the proceeds from completion of the sale of our theaters in Lithuania and the equity capital that we raised during the quarter. Regarding capital allocation, we're pursuing a balanced approach to capital allocation, and our priorities are as follows. 1, ensuring that we have sufficient liquidity to withstand any bumps along the road and the inevitable volatility as our industry recovers from the impact of the COVID pandemic. 2, strengthening our balance sheet by reducing our debt and associated interest costs. 3, investing in our business to enhance the guest experience. And 4, opportunistically pursuing value-enhancing partnerships or acquisition opportunities. With our current solid liquidity position and the recovery that we are seeing in the business, we believe that it is appropriate to carefully deploy our cash in ways that are most beneficial for the long-term future of the business. Well, of course, we will continue to be ultra-focused on our operating efficiency. This will be rather than focusing on short-term monthly cash burn. And what I mean in this regard is we expect going forward that we will choose to pay cash interest as opposed to payment in kind or PIK interest. This will avoid any increases in our debt position. We also anticipate taking thoughtful actions to reduce our debt, including
rid of that debt,
deferred
that's
rent
right.
balance. All of this
That's
with a
huge.
view to strengthen our company for the future. In addition, we will
This guy
continue
sound like
to
he belong
actively
on
manage
Animal
our theater portfolio, closing underperforming locations. We've quietly closed more than 74 marginal or money-losing locations over the last 18 months, and opportunistically pursuing attractive, high-potential locations, which Adam will discuss when he comes back on. Turning to our landlords, at the end of the second quarter, we had deferred rent obligations of $420 million, representing
This
a
huge right
decline
here.
in obligations of approximately $55 million compared to Q1 of 2021. For the second quarter, actual cash rent paid was approximately $55 million more than what is shown on the face of the income statement as we repaid deferred rent.
So they
While
paying back the
future cash
landlord.
rent
Yeah,
payments
yeah,
will
the
continue to be
deferred rent.
dependent
Right.
on ongoing discussions with landlords, we anticipate cash rent paid in the second half of 2021 will be significantly higher than in the first half as we continue to work on reducing the deferred rent balance, and we take advantage of opportunities that may arise to, for example, prepay rent in exchange for favorable lease terms.
That's huge.
For now, we continue to focus the substantial majority of our capital expenditures on maintenance spend. However, a small amount of growth CapEx could arise from potential opportunistic high return investments later on in the year. CapEx for the second quarter was $10.5 million. This is net of landlord contributions. Net CapEx for the whole of 2021 is expected to be in the range of $100 to $120 million. Reflecting on our results and the financial position at the end of Q2, it is quite remarkable just how far we have come in a relatively short period of time. We believe that we are uniquely well positioned for a strong and profitable recovery now that all our theaters are open. We have a backlog of exciting movie titles to be released, and we have record levels of liquidity. And with that, I'll pass the call back over to Adam.
Thank you,
Breaking
Sean.
news coming. We about to find out what this
I've
is.
been saying publicly ever since we raised that life-prolonging additional equity in May and June that it was high time for AMC to start playing on offense again. And earlier on this call, I promised you some news. So here goes. Quickly, on 10 specific items. 1. You already know that with ArcLight and Pacific Theater's decision to permanently shut down, we announced that we've executed 2 leases with Rick Caruso's world-class real estate organization to add to the AMC fleet of theaters 2 of Los Angeles' highest-grossing cinemas. The Grove and Americana at Brand were the 2nd and 5th highest-grossing theaters in Greater Los Angeles as recently as calendar year 2018. They should open later this month as AMC theaters. However, I can confirm today that the number is not 2 new theaters for AMC. It might be 10. We actually now have 6 new theater pickups.
8 Nation.
Or signed letter of intent, not 2. 3 of those are in Los Angeles, 2 are in Chicago, 1 is in Atlanta. And we also are currently in advanced negotiations
All big
to add
markets.
4 more, bringing the possible pickups to 10. 8 of the 10 would come from former ArcLight Pacific locations. Item 2. Speaking of new theaters, in 2021, we will open about a dozen new build theaters in the U.S., Europe, and the Middle East that were all well underway before COVID struck. I'm happy to report that we do know something about designing beautiful and productive theaters. In the United States, for example, we opened 3 new theaters in 2021. The 2 in Los Angeles, AMC Porter Ranch and AMC Dine-In Montclair, are already each among the top 25 highest grossing movie theaters in the entire United States. That puts each of these two theaters in the top 1/2 of the 99th percentile of highest grossing U.S. cinemas. And that was achieved in just their first few months of operation. Really astounding. Our new AMC Dine-In Theater in Sunnyvale, California also is doing amazingly well. It's in the 94th percentile of highest grossing U.S. theaters. Item 3. Many of our new individual investors have showered us with great ideas about how we can strengthen and brighten the future of AMC. Among their ideas for AMC are that we show concert movies, professional sporting events, esports, and gaming events. Wasting no time, we've immediately started to implement on these very good ideas. Our first 2 UFC matchups, which were in July, drew significant attendance to our theaters. Our first 2 concert movies, with Chance the Rapper and Halsey, will show at AMC theaters across the country later this month in August. We're quite optimistic that this alternative programming can be built into a real revenue opportunity for AMC in future years, and we're chasing it hard. We also hope to engage in meaningful dialogue with professional sports leagues and collegiate sports conferences
That's
to
big.
see if we can obtain the rights to show more sporting events at our theaters.
That's huge.
As for gaming opportunity, indeed, the president of Epic Games is a member of the AMC board of directors. And I cannot
Wow.
even count
That's the
number of
biggest
times
one so
already
far to me.
The
that
Epic
our
game.
shareholders
done
have
it.
asked us to reach out and partner with Gamestop.
Wow.
Item 4. Many of our new shareholders also are quite enthusiastic about cryptocurrency.
What the hell
Some of you
going
may
on
know
here?
that my best friend of almost 25 years duration in Europe, the billionaire former chairman and owner of Silversea Cruises, formed a SPAC earlier this year called Centricus, and he asked me to join its board of directors. SPAC, for those of you who don't know it, stands for a Special Purpose Acquisition Company. That's a fancy name for a pool of investment capital in search of a company to buy. Ironically, Centricus is under contract to buy a fascinating company called Arquit, A-R-Q-U-I-T, who just happens to be on the very cutting edge of quantum encryption and blockchain technology.
Yo.
It was initially funded by the British government. Its clients include British Telecom, the European Space Agency, and Verizon, among others. My role as a board member is merely to ensure that all laws and SPAC norms are being complied with when that acquisition of Arquit is completed, which will be soon, I would expect. I will then drop off the board of directors. However, to get to this point, I've had to learn more in the past 6 months about blockchain and cryptocurrency than I learned about it in the entire decade before that. This increased knowledge has given me the confidence to tell you all today that AMC is hereby formally announcing on this call that by year end, we will have the information technology systems in place to accept Bitcoin as payment for movie tickets and concessions.
Okay. Adam.
We also are in the preliminary stage of now exploring how else AMC can participate
On the
in
blockchain.
this new burgeoning cryptocurrency universe.
Yes, sir.
And we're quite intrigued by potentially lucrative business opportunity for AMC if we intelligently pursue further serious involvement with cryptocurrency. More detail will be shared publicly with you, but only if, as, and when our plans are more firm. Item 5. Since we have to do the IT programming to accept Bitcoin anyway, we are simultaneously writing the code right now to accept Apple Pay and Google Pay for online purchases at our U.S. theaters also. These new payment methodologies for us should also be implemented by year end. Item 6. Again, speaking of our new shareholders, in June, we introduced a new program called AMC Investor Connect that got a lot of press attention. It's part of AMC Stubs and offers our shareholders who participate full Stubs benefits. We are thrilled that almost 300,000 of our shareholders have already joined. Our goals with the program are simple. We'd like to improve the communications that we have with the people who own AMC. And we also want to convince many of the millions of people who are now our shareholders into becoming avid customers of our theaters as well. Hence, we already have made multiple free and discounted offers to participants in AMC Investor Connect, and we're setting up a program of special advanced screenings for our AMC Investor Connect members. To that end, a very special thank you to Sony Pictures for enabling our first such advanced screening in July, ahead of the scheduled theatrical release of Escape Room Tournament of Champions. Item 7. Also, to heighten the information exchange with our new shareholders, as well as with the public at large, in April, I started actively tweeting again, which I've not done since my days when running the Philadelphia 76ers back in 2013, when Twitter was my social media platform of choice to interact with sports fans. My Twitter followers have more than tupled since April and now exceed 150,000. But what kind of blows my mind is that according to Twitter analytics, my tweets, which I write personally, so far have been read more than 72 million times. In addition, I'm actively following almost 2,000 people who appear to be interested in AMC to get a better sense of what they're saying and thinking. I also make it a point to check and read my inbound Twitter feeds personally. There are hundreds and hundreds of replies to any tweet that I publish, which I find gives me a more sophisticated and better understanding of what's on the minds of AMC's new owners. Item 8. With labor costs going up in some places around the country, our costs are rising in the United States. We've also noticed that there's appeared to be little price resistance to the increased prices currently being charged at our U.S. theaters. So just last week, we imposed an approximate 5% admissions ticket price increase at many of our U.S. theaters. On average, that's about 50 cents or so in an increased admissions ticket price. We think consumers will find that palatable, but hopefully that will meaningfully strengthen the AMC bottom line. Item 9. There's a lot of talk currently about exclusive theatrical windows, or the lack thereof. You all know that AMC was way ahead of this issue, reaching a landmark and historic agreement with Universal in July of 2020 on their concept of premium video on demand. We were pleased then, and we're still very pleased now, with the outcome of the Universal AMC agreement, and in our mutually working through that initially contentious issue, AMC and Universal are now very close. In fact, I think we have the best working relationship that we've had together in many years. In this same vein, I'm also pleased to announce today that AMC just reached formal agreement with our friends at Warner Brothers to show all of their movies in calendar year 22, importantly respecting an exclusive theatrical window of 45 days prior to home release for all Warner Brothers
huge.
films.
Yeah, that's huge, especially with the streaming service that they got.
The AMC was not at all happy when Warner decided in December to take movies to the home
exclusive
on HBO Max simultaneously with theatrical release. Therefore, it's especially gratifying that Warner is yet again embracing an exclusive theatrical window. And for us at AMC, it's especially pleasing to be working so harmoniously with Warner Brothers once again. We actually are in dialogue, active dialogue, with every major studio on this very important topic. We are hearing considerable support in Hollywood that an exclusive theatrical window is an important way to build big and successful movie franchises. Clearly, though, this whole subject is quite topical. It's very much a work in progress. We will keep you posted as things turn out. And finally, 10. I'd like to thank the board of directors of AMC for electing me in July to serve as chairman of the board, as well as CEO of AMC Entertainment. You know all that. And you've also heard that former U.S. Ambassador to the United Kingdom, Phil Later, was elected to serve as the board's lead director. To be no surprise to any of you that we have a highly able, experienced, and dedicated board, I feel fortunate to serve with them all. But the news on this point is that at our first meeting of the board in my new role, I discussed with the board that I think it is extremely important that company insiders maintain a significant financial ownership stake in AMC through owned and or granted shares, so that insiders have financial interests that are directly aligned with those of our shareholders. Our board members already have a policy in place that they must hold any granted shares for at least one full year. But there was no such plan currently in place for the company's 19 most senior executives. Therefore, I will be recommending to the board a new policy. Without going through all the nuances, and it's kind of complex, but to simplify it and break it down, I will propose that I, as CEO, be required to hold a number of owned or granted shares at least equal to 8 years of my salary. In my case, 8 years of my salary would mean that I would be required to have at least a $12 million ownership stake in AMC of owned or granted AMC shares. Sean, our Chief Financial Officer, would be required to hold 6 years of his salary. Our Executive Vice Presidents will be asked to hold 4 years of their salaries in owned or granted shares, and our Senior Vice Presidents will be asked to hold 2 years of their salaries in owned or granted shares. The board will consider this proposal as new policy at its next regularly scheduled meeting.
Yeah, I think that's fair.
At the same time as I am emphasizing share ownership, I'd like to remind you that I have not sold one share of AMC stock in the 5 full years I've been running this company, even though it represents more than 3/5 of my annual, when I say yet, when stock represents more than 3/5 of my total annual compensation. Other than gifting a small percentage of my AMC ownership stake to my 2 adult children, earlier this year, I also did not sell any AMC shares in March when I could have. I did not sell any AMC shares in June when I could have in 2021. I similarly will commit that I do not intend to sell any AMC shares in September of 2021 when I'm legally permitted to do so. But as much as this pains me to admit, in September, I'll be celebrating my 67th birthday. I'm going to be a young, vibrant 67, but hey, it's 67 nonetheless. 2 months ago, more than 85% of my net worth was in AMC stock, and proper estate planning for a 67-year-old suggests I should diversify my assets a bit. But I don't want any of you ever to think that I have anything but full confidence in AMC's future. So I will do so under the auspices of the parameters of what is called a 10b5-1 plan. where I pass off all the share trading control of the shares that I own or am granted to an independent third-party bank based on parameters of the plan that I only partially set.
He's starting
The
losing.
plan would not go into effect until towards year end at the earliest, and only a small percentage of my owned or granted shares could get sold in any 1 month. And that would then be repeated over a period of at least several months. This way, I really have passed on the decision making to someone else on this important topic. Additionally, whatever is sold or not sold by an independent third party, I still will have millions of AMC shares
You have to sell it
that
yourself
either
if you
are
do
owned
all
by
that.
me personally or have been previously granted to me personally. My economic incentives are very much aligned with yours to increase shareholder value for all the owners of AMC. What's more, I so fully believe in transparency that I'm letting you all know this well in advance, even though current U.S. law does not require me to make this or even any public disclosure now,
This should have been
at this time, or
number one.
at any time soon, prior to any shares actually being sold. Well, there you go. That's the quarter. That's 10 items of news. Our second quarter was a very encouraging one for AMC. We believe we're on a road to recovery, and we're ever so grateful to our friends and allies who share our passion that AMC's best days should be those that are coming. You can take comfort that our deeper financial reserves allow us to stay the course, to innovate again, and to capitalize on the opportunities that we see around us. We fundamentally believe that ours is a future that is bright, because there is nothing as magical as seeing dazzling images on a huge silver screen. We're now going to turn this call to the questions that were submitted and uploaded with the greatest shareholder interest on the Say Technology platform, and then we'll take some questions from analysts if you all can spare
We'll
some
listen
time.
to a couple questions. We're
I
not going
should
to listen
point
to all the
out
questions.
That
Great.
This is an experiment, this State Technologies platform, for us.
3 questions.
It works really interestingly, but it only works with some brokerage firms, not all. So many of our U.S. shareholders, and especially many of our international shareholders, may not have had a chance to ask their questions on this call. Still, we've had quite a bountiful array of questions posed to us to answer. Sean, what's the first question?
Thanks, Adam. So the first question that we have is from Timothy, and the question is, do you have any plans to offer a dividend again?
Thank you, Timothy. We appreciate the question.
Great question.
If you look at our path since going public in 2013, AMC paid a sizable quarterly dividend every quarter until we got close to the pandemic. And realizing that our liquidity would be stretched, we ceased offering a dividend. There are some commitments that we've made in some of our debt instruments that we cannot pay a dividend until, at the earliest, about a year from now. Having said that, we do know that dividends are very much on the mind of our shareholders, so we'll take that interest quite seriously when we have the ability to make dividends once again. We'll balance those shareholder desires against the other competing uses of our cash. What opportunities are available in M&A? How much do we need for liquidity? What can we do in the way to deleverage the company? All the priorities that Sean talked about previously.
Great. Thanks, Adam. And the next question is from David. The question is, will AMC consider partnering with Gamestop to offer more theater experiences via local and national
be
gaming
interesting.
competitions?
As I said in my remarks just a few minutes ago, I don't even think I can count the number of times people have asked me if we could partner with GameStop. We're certainly willing to do so. it seems to me it's one of those interesting ideas that flowed in from our individual investors, and we're happy to reach out to GameStop and see if they have any interest.
The next question is from Ryan. The question is, would AMC ever consider re-establishing drive-in theaters? With the current state of the world, it would bring a lot of revenue with little worry for people trying to social distance.
Ryan, that's a great question, and the reason I say it's a great question is I asked that same question last July, and we went through an exhaustive analysis of drive-in theaters, and honestly, we came to the conclusion that they're a bad economic idea. It sounds appealing, yes, you stay in your car, but there are two problems. Go into a parking lot and look at how much asphalt is needed to put a lot of cars in a lot. The viewing experience at a drive-in theater is not necessarily great because many people are quite far from the screen. Additionally, drive-in theaters are very seasonal. They're not popular in the winter in colder locations in the United States. And in the summer in much of the United States, it doesn't get dark before 8 or 9 o'clock p.m., which means that you really can only use the drive-in screen for one showtime a night. The economics aren't there. It's unlikely that we would go forward. It sounds like it's a great idea, but it isn't actually.
Thank you, Mr. Adam Aaron, CEO of AMC. Interesting earnings call. Let me go through some of the notes I jotted down. So it was at least 10,000 listeners on the call. They are at 100-year high liquidity. So this pretty much their highest liquidity ever in the company, which you can factor that into inflation. You can whatever you want to factor that into. Over $1 billion in liquidity. It's doubled since quarter one. They exceeded their own expectations. More than tripled in ticket revenue. So I think that was pretty.
Yeah, that was big.
Yeah, that was big.
But
go ahead.
They more than tripled in ticket revenue since this time, quarter two of 2019.
Right,
just to be clear.
Right. They paid back the landlords their deferred rent.
Right, that was big.
That was big. I thought that was pretty huge. They signed a big deal with a real estate company that put them in bigger markets. One was California. I thought that was decent. I think opening up new theaters are standard. I don't really think that's nothing to get up out my chair about. The crypto news.
That was
you
big.
got out your chair for that.
Yeah, that was big.
That was huge. AMC bringing in crypto, accepting Bitcoin by year end, and Epic Games is on the board of directors
of AMC.
AMC. I'm not sure the exact person he said that was on the board, but somebody from Epic Games is on the board of directors from AMC. That was huge.
So along with that, they're currently, if you remember what he said, I don't know if you heard what he said, currently they're coding some to be able to function on a blockchain as well.
Right.
So that's huge.
Right.
Like we talked about earlier, that, I said my belief is that this whole system is transitioning.
Right.
The current system is transitioning to merge into the blockchain.
And I wonder what that looks like for them specifically. Is it NFTs or is it, Right. It's going to be creative. Yeah. It's going to be, this digital world is amazing.
Right. So.
They had an exclusive theater release. They signed a deal, or what? Did they sign it, or are they still in negotiations with?
It's a what do you call it? Letter of intent.
Okay, letter of intent.
So essentially, those are presented. Right. Essentially, it's a good faith agreement.
Right. So what happened is they got a letter of intent with Warner Brothers for exclusive theater releases first 45 days. First 45 days. So, first 45 days, that's that letter of intent. I think with a lot of these streaming services that's just coming on board, not Netflix, but the other ones that actually produce movies in movie theaters, they're realizing that they still want theater revenue. I think that is big for them, for the big blockbuster movies. So I do think that you'll start to see more streaming services work with more theaters. And then the last one I got was him fighting for board members to hold more significant shares. And I won't go specifically into the details of what he said there, but he's proposing to the board for them to hold a specific amount of shares when they're on the board.
Right, and I think that, you'll see some pushback from that.
Right, it's not indefinite, right.
Right, you'll see, but I'm just saying from the shareholders.
Right.
I don't think that, overall, what you think about the call?
I thought it was a great call. I thought it was a great call. I thought it was a great earnings. We can hop more into it during pre-market. We'll be live pre-market. If you're watching now, please give us a like, comment, and subscribe. We gratefully need your support. I think it was a good earnings call. As an AMC shareholder, you never know how this will really affect the movement, though. Like, I don't want to just go outside and start screaming. For the most part, though, it was great. The crypto thing was great. The Warner Brothers thing was great. The revenue, paying off the debt was great. And I think the movement needed this. Yeah. I do think the movement needed this.
Absolutely. We talked earlier about, some of the fatigue, that some of the apes may have, with this long process.
Right.
I think this gives new life. Overall, what I'm most appreciative about the call is that the fundamentals, you can see the fundamentals of the company, that they're stronger than they were when they were on the board of teetering with bankruptcy.
Right.
And they're positioned to be even stronger in the coming days, weeks, months, and years.
And I'm glad you brought up that, because there's so many big media people, big stock and analysts, or whoever they think they are, want to speak about the fundamentals of AMC and shun it and denounce AMC because of the fundamentals. And then when you have these type of fundamentals back in the news and the hype around it, it makes it even bigger. And it's kind of like validation. It's kind of like validation for the shareholders.
Yeah, and it being a sound investment.
Right.
Because it's important. Again, we don't give out any financial advice, but when I look at investments, for the most part, I always want to. I'll always make a decision based off of sound opportunity.
Right.
If the opportunity is sound.
Right. Antonio, did you have anything to add about the call in AMC period?
I think the call was more so basically saying that fundamentally we're strong. So, like Adam said in the beginning of the call, AMC is crushing it, fundamentally wise.
Right.
So let's see if this is a cause and effect to see if shorts double down or cover.
Right. Thank you for your input. It's going to be interesting. And once again, when we started this live, I said it's an evolving journey. It's an evolving thing. This isn't done. This is to be continued. We greatly appreciate your support. Please give us a like, comment, subscribe. Welcome to the new age. And we out.